Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, October 9th, and we'll see how things look for Friday, October 10th. Going over a recap of what happened on Thursday, the S&P 500 opened strong, hitting an intraday all-time high at the 6780 level, but the enthusiasm faded as the index closed down 0.28% for the day. Despite the pullback, there was no significant technical damage. Growth stocks outperformed their value counterparts, which led to an improvement in the key growth-to-value ratios, a positive sign even on a down day. The S&P saw choppy trading after the open, dropping below the daily pivot at 67.42 and S1 at 67.29. It found temporary support at 67.20 before late-day buying pushed it back above S1 by the close. The late rally is encouraging, suggesting dip buyers stepped in to defend key levels. Importantly, the S&P 500 remains above its 20, 50, and 200 period moving averages, signaling that the broader uptrend remains intact for now. Trading volume, however, was below average, a trend we also saw on Wednesday's up day. This lighter volume can partly be attributed to the ongoing government shutdown, which has halted the release of economic reports. Without fresh data, investors are relying on technicals and alternative indicators to gauge market direction. Turning to other asset classes, the US dollar showed signs of strength but remains within a longer-term downtrend. If the dollar breaks above the 100 level, it could exert pressure on stocks, so this is a key level to watch. The 10-year Treasury yield ticked up slightly to 4.15% from 4.13%, reflecting a modest move in interest rates. Meanwhile, gold fell back below 4,000, likely due to profit taking, but it continues to hold up relatively well. Market sentiment is currently neutral, though it's drifting slightly toward the negative side. We're seeing pockets of fear in certain indicators, including the VIX to S&P 500 correlation, even though the VIX itself remains relatively stable, suggesting no immediate panic. Geopolitical developments, including an initial peace deal between Israel and Hamas, have had little impact on the markets, which continue to operate in their own universe, largely detached from global headlines. Looking at sectors and stocks, staples were the only sector to close in the green, reflecting their defensive nature. Tech, industrials, and communication underperformed, though many sectors recovered somewhat by the close. Among individual names, Amazon gained over 2.5%, Meta rose more than 2%, Nvidia hit another all-time high, up 1.83%, while Apple slid over 1.5% and Tesla dipped 0.72%. The Dow Jones Semiconductor Index also set a new high, though the broader SMH Semiconductor ETF saw a slight decline. Internally, the market showed mixed signals. Growth-to-value ratios did improve, particularly for large and mid-cap stocks, which is a positive development. However, short-term momentum indicators, including the Williams %R and CCI 20, weakened slightly but remain positive, showing good conviction. On the other hand, primary indicators, including the McClellan Oscillator for the S&P and Bullish Percent Index, have now turned negative, signaling some underlying caution. Long-term indicators, such as the 10-day average of highs and lows for the S&P, continue to reflect internal strength, suggesting the market's foundation remains solid for now. Looking ahead to Friday, October 10th, the outlook remains cautiously optimistic. The S&P 500 is holding above key support at 6,700 and the 20-period moving averages. A break below these levels could shift the short-term narrative, so they're critical to monitor. Positive short-term conviction is showing some cracks, but is holding up for now. Growth-to-value ratios and late-day buying on Thursday provide reasons for optimism, but we're also keeping an eye on the dollar's trajectory and the financial sector's ongoing underperformance relative to the S&P 500, which could hint at broader concerns down the road. On the data front, we expect the University of Michigan's Consumer Sentiment Report, which should provide some insight into consumer confidence. However, the Treasury Budget Report is unlikely to be released due to the government shutdown. Seasonally, October 10th has a neutral to negative bias for the Dow and S&P, but is neutral to positive for the Nasdaq going back to 2002. Geopolitical developments, including President Trump's Middle East trip this weekend, may introduce some unease, but the market has so far shrugged off such events. In conclusion, the S&P is still in a positive trend, supported by key technical levels and selective strength in growth stocks. However, we're seeing early signs of caution in short-term indicators and persistent concerns about overextension, such as the S&P 500 now at 11.39% above its 200-day moving average, a level that has historically preceded more significant pullbacks. For Friday, it's best to watch the 6,700 level, dollar movements, and consumer sentiment for clues on market direction. Thank you very much, and I will talk to you in the next podcast.